very strong informed element is NVIDIA and Tesla, the two stocks that I've followed myself and do follow. And it gives quite an insight into what is going to happen as a pairs trade. When we do this type of analysis, it's always a good idea to see what a line looks like. This is an hourly chart because they are bigger macro swings rather than micro swing narratives. And this is basically the relationship of Tesla to NVIDIA. If we look at Tesla, the interesting thing about this relationship is that this relationship lags behind Tesla. Now, why would that be useful to me? Well, as a pairs trader, of course, it's very useful because any type of situation where we get a consistency in terms of lagging relationships can make us money as a pairs trader. So when I look at Tesla, I can see that obviously I'm going to be selling Tesla. Obviously, the purple line lags, so I'm going to be selling Tesla and I'm going to be buying NVIDIA. So when we came into the pre-market this morning, you can see quite clearly, very clearly, that I'm going to be selling Tesla and buying NVIDIA today. Well, you can see what's happened since that very strong divergence of value. We've had a very, very strong sell coming in here. So we've made a lot of money on that trade pre-market, haven't we? Very, very substantial amount of money pre-market. Now, the interesting thing about this relationship is it can also sometimes help you predict the directionality of the underlying markets. Now, how is that possible? Well, generally, as a rule, if I'm selling Tesla and I'm buying NVIDIA, as a rule, if I'm buying NVIDIA, a lot of the times that's going to have a real interesting impact on the stock market. It has more of a market relationship than Tesla does. So when I see that I'm going to be buying NVIDIA, it leads me to an initial bullish feeling about stocks. So obviously when I look at NVIDIA here, you can see that if I was to buy NVIDIA during this phase, this line is almost a perfect negative correlation to NVIDIA itself, which is great news. So if I'm going to sell Tesla here and I'm going to buy NVIDIA here, you can see that Tesla's dropped significantly pre-market into today's open. And NVIDIA's actually went kind of sideways. It's not lost me any money. Made a lot of money on that pairs trade today. A lot of money. But it can also help us with some understanding about the underlying stock direction. If NVIDIA's bid generally as a rule, stocks are bid. If NVIDIA's offered generally as a rule, stocks are offered. It's just the way of the beast because of the market sector that NVIDIA occupies. So when we think about this, NVIDIA is not so much a niche stock as Tesla is. So when we think about this as a narrative, of course, if I'm selling the purple line, as a basic rule of thumb, I am bullish stocks. And you can see that as you go into this phase here, you can see that initially there was an idea that we might be bullish stocks at the US Open here. And you can see that this bullish stock at the US Open had a nice upside. This is the SPY we're now looking at on the candles. So we got a very nice buy on the SPY, a very nice revival in prices on the SPY here. And you can see from the cash open a very, very positive pop outcome. So again, we're using the concept of the arrival rate to help us with some of these very obvious decisions, as far as I'm concerned, in terms of some of these kind of basic stock rotations. And again, when we look at this as a storyline, all we're looking for is things that are not right. We can see here, for example, quite a good example coming into the closing bell that you're going to be buying Tesla, which means you're going to be selling NVIDIA at the closing bell. Again, this idea of the arrival at the right time of the day, getting a strong case that you're going to be buying Tesla stock, but you're going to be selling NVIDIA. And I've just mentioned, if I'm going to be selling NVIDIA at the closing bell, I've kind of got a gut feel that this is going to be, at the time, bearish stocks. So I get that idea that I'm going to be looking more towards that as a possible storyline at the closing bell. And you can see that if we take it at the closing bell into the last big stock sell-off, you can see that that area there becomes an incredible short as we begin 2024. You see how nice that is as a trade? You see how beautiful that idea is for that overnight, over the weekend, over the holiday period short sell narrative? And obviously the trade developed into a massive sell side swing in line with that underlying storyline. So there's a lot in this as a process, isn't there? But it's just one of those other processes that, again, it's just another piece of information. But that's what we're here to do, is to explore. We are, in the olden days, we would be the prospectors. We would be the guys that would be laying down new foundations for the next oil find or the next gold find. We are the people that have to take on the risk. That's what we do. That's our job as traders, is we buy and sell risk. So what we've got to try and do is find ways of minimizing that risk that we take on our books. Anything that takes down the risk levels is a bonus. If we can understand that, we can make money. Finding relationships, quite unique relationships, kind of niche relationships, like NVDA, Tesla, or any other correlation, any other types of component relationship, like XLY, XLP, like XLU, XLK, these types of relationships, like the Vanguard relationships of growth and income. They're all niche relationships, but they all reduce risk. They all help to point out the toxic behavior of the marketplace. They help us to point out the toxic nature of what we as traders should be doing. And if we're good at it, we make some brilliant trading decisions with very low risk attached. That sometimes means that being on the sidelines for a long period of time because not very much is happening. And sometimes that means that we don't get any trades for, perhaps an entire day, but it's unlikely. Depends upon your time frame of reference. But the key about it is that we're starting to become very particular about what we buy and sell. Everything has to have a value. Everything has to be priced up properly. Everything has to have an edge. And if it's not got an edge, we leave it alone. And it might turn out to be a great trade. You'll remember all the ones that turned out to be great trades, and you'll be kicking yourself. You've probably forgotten about all the trades that you saved yourself from a massive drawdown. Easy to forget the losers, and it's very easy to remember the winners that you would have or should have or could have had you not followed the process. But if the process works, you stick to it.